One recording started. And 2 recording started. Okay, everything under control. So I hope everyone had a good start of the week today. I think there were plenty of opportunities today with a lot of follow through. So I hope you had a good start. Anyway, let's start doing some journals here that came in. I'll just start those journals. Then later in the session, Tyler will talk about stop and reverse, and Tony will talk about violence. Okay, so it's going to be a violent morning here with reverse in it and everything. So, oh, Betty, you took Uber. Yes, I saw that. Yeah, I think Uber was. Uber, I think, was a great stop and reverse. So maybe Tyler can cover that later in the session. That's an interesting one. That was definitely a stop and reverse. I didn't trade it, but had I done so, I hope I would have stopped and reversed on that one. Okay. Yeah, I think Uber was one of the few that really didn't follow through, went all the way the other way. Well, you see, you always need a bit of luck as well. You can just end up in the wrong trade. However, when you end up in the wrong trade, all you can do is try to survive it as well as possible. And I think Uber was an example today. Okay, we'll see that. Okay, let's do some reviews here. First, let me find my marker here. So we're full house today. Nice. Okay. Let's check this. All right. Bang! And the markets is open. Thank you, Tony. Okay. So let's start with this journal by Mike. And why do we start with this journal? Because Mike has marked this as a biggest loss trade here. See that? And whenever you do that, your journal gets preference. You go first. You get the most attention. Okay. I don't know how everybody's doing with their 20 trades. Are you guys still collecting those? Are you still trying to find out what your biggest problems and losses are? I really, Betty loves collecting those losses. Okay, aren't those great losses, Betty? Yeah, I see. I know. Okay. So anyway, hope to see some of those. I think Wednesday is our last session for this month. So if you want to have any of those covered, then you have to send them in now so we can cover them on Wednesday. Okay. So Simon is saying I'm only doing 1 or 2 trades per day. That's perfect, Simon. I think recently over the last weeks or months, I think I'm taking like 2 to 3 trades every open, something like that on average. So 1 to 2, I think that's perfectly fine. It's not about doing a lot of trades. What it really is about is selecting the right trade and do that one properly. That's what it really is about. Okay, so don't feel like you're not doing enough. So Gurmeet, if you had a $99 loss trade, I would love to see a journal of that trade in the next session. Okay, that would really be nice, so we can cover that. Okay, so let's see what Micah did here. Mike is trading Uber here. Again, Uber. Yeah, Uber is actually a stock. I could be wrong there. I have not really investigated that, but my impression is that Uber quite often actually just goes the other way. So it starts out nice and then it just goes the other way. That makes it a little tricky, but then again, it has a lot of movement. So if you know how to trade this, then I think it's still very interesting stock. Yeah. All right. Look here. So first of all, max loss per day, $90. Okay, that's great information for us. And then we have here, we have the first 4 parts of the checklist. The first one is she's identifying a bottoming tail bar here. Okay. Yes, bottoming tail bar. Okay. Position is plus. Look, she's marking the Fab 4 here, And position plus, that means just above the Fab 4. That's fine. Anticipatory entry. Okay. And stop max loss per trade. Max loss per trade. Let me see. This, to me, this looks more like an event stop here. Now, maybe this coincided with your max loss per trade. Let's take a look here. You're entering roughly at 40, and then your stop is roughly at 95, 45 cents, $90. Okay, so the way I understand this, Mike, is that in fact, this is an event stop that happens to coincide with your max loss per trade, right? So it's basically the same thing. So it's not like you decided to go max loss per trade, but it's more like you decided to go by for event stop, and then that just happens to be the same as the max loss per trade here. Okay. One question here is, this bar is pretty big. Was there an opportunity to get in a bit earlier, maybe? This was on Friday, right? Or was this after 1 minute it was already here? Check that too. One minute 30 you got in, okay. Let me just quickly check here what it looks like. There we go. Check it out 1 minute. There we go. Yeah, so actually what I see now is that this bar already made, this bar was entirely created in the first minute. In the second minute, it just wobbled around a bit here at the top. That was all it did, okay? So obviously you did not have another opportunity to get in earlier. I see that. Okay, perfect. Okay. As long as it's not that you waited for this, right? Because technically this is the right entry, but if this happens, if you get here after 1 minute, then there's nothing you can do, of course. Then that's just the way it is. Okay, so here we go. It goes up, it goes down here. We have a little GBI here. We have a failure. It goes down again. Okay, okay, okay. And you get stopped out here. Does anybody see any mistakes here? Is there anybody who says, nah, that should have been done totally different? Curious. Ali says 2 color rule. Many people say no. Checklist trade, right? Same trade by Vladimir. I was expecting Betty to say 2 color rule here. I'm surprised you're not telling me that, Betty. For some reason, I did expect you to come up with that. Neil says, do you think we have 4 pushes in the first move? Needs to add on about 4 pushes. I'm not sure. Don't really understand 4 pushes here. I'm sorry. Carlos says the entry is kind of late. We just discussed that, Carlos. The point is that this bar was entirely formed in the first minute. So there was no way that she could have entered earlier. Okay. So anyway, no, okay. This gives me a great opportunity to elaborate a little bit on a discussion that we also had last week, right? About the 2 color stop rule, whatever. Okay. And this is a good example. So first of all, let's just look at this as a plain checklist trade, right? Checklist trade meaning that you're not trying to optimize all this stuff with 2 color stop rules and whatever else that you come up with. Okay. You don't do that. You're just telling yourself, look, I'm a beginner. I need to really get this checklist under my belt. I should not be distracted or sidetracked by all these things that are going on in the trade, right? Because I'm just not up to that point yet. That I will do in a couple of months when I have the checklist really under my belt and I can trade it without emotion, right? If you handle it this way, this is great. You just go into this is a great entry. You put the stop in the right position, and it just didn't work. Okay, it just didn't work. That happens. There is like an ad here. However, she's already trading at max loss per trade here. So an ad here, here would have been a mistake because it would have compromised the stop. the stop would have moved up implicitly because max loss per trade would require you to do so. And that is a bad thing to do. It's more important to just maintain that stop and give the trade the chance to develop. Okay? So if we trade this if we deal with this as a plain checklist trade, this is great trading. It just didn't work. So there is nothing wrong here, Mike. I think you did well here on the long side. If we look at this a little bit more advanced and we start to like see what the flow really is, what is the flow of the price here? What are the candlesticks really telling us here, right? Then things become a little bit different. Now what you see is that this is a great bar. You really expect follow through here, right? There is some follow through here. There's definitely some follow through here. Okay, and a little bit more, but it's not impressive. The impressive bar here is this one, the big red bar here. Now you don't like to see this, right? This is like one strike against you. Okay, this is against us. That's not enough to do anything. It's just an observation. It's just something where you see this thing is going against me. Okay, let me just put a check mark there. That's it. Now we get a little GBI here and another attempt to go up. You guys see this? Look what's happening here. This is green, right? At some point, this bar is totally green here. Okay, and then it fails to actually follow through there. It just makes that tail. So now it's red again. So we have a hidden green failure here. All right. Check. Now we have 2 strikes against us. You see that? 2 strikes against us. This is bad news. This thing is supposed to follow through. Okay. And here, look what happens here. It actually triggers here on the GBI. That is actually like a 3rd strike against you. Not only does it really fail here 2 times, or actually 1 time it gives you an ugly bar. The 2nd time green fails to follow through, but actually it triggers even on the GBI here. Okay, so now we have what I like to call a candlelight story. Okay, this is like a candlelight story telling you that this trade is in trouble. This is bad news. Okay, so if you are advanced enough, you have the checklist totally in your belt. You can trade it, not only technically perfect, but also you feel comfortable with it, right? Because it's also about learning to have to keep your emotions under control and not act on any red bar that goes against you or start to interfere with the trade and with the checklist plan, right? If you can do that, so you're beyond the stage where you stop out here, then this is a great moment to close that trade. Okay? But I consider that advanced stuff. To me, this is advanced stuff. You really have to learn how to be able to do that. And it's not a matter of not advanced I'm not trying to say it's difficult, okay? It is not something where it's advanced in terms that you are not smart enough yet to understand this. No, that's not what I'm talking about. Trading is not about being smart, and certainly not about being smarter than the markets. What it really is about is being smarter than yourself. What I mean by that is the psychological part of it. Being able to actually execute a plan without getting blown off the track, okay? Starting to interfere, closing the trade because you see red bars going against you, stuff like that. That's just not good. That has nothing to do with trading. And as long as you cannot really do that, as long as you have not mastered that part of yourself, it is better to just be stopped out here and live through this whole thing. That's the way you build good experience. There's a big difference between good experience and bad experience. The good experience is to live through this horrible pullback and get stopped out here. Experience what the market is actually doing here, okay? Bad experience is just closing the trade somewhere here because you say this is not going to work. You see the difference? Do you understand the difference? However, if you are up to the level where you understand why exactly in a reproducible way, right? That you do this today, but you do exactly the same thing tomorrow because you have like a rule for yourself when to do this and you understand how to use it and you're not bothered by your emotions anymore. That's a different story. Now, this is not bad experience. It's actually great experience to close it here. Do you see the different stages of development that you go through as a trader? There are many of those. And don't try to shortcut that. It doesn't work. If you jump too quickly to a level that you really cannot deal with, you're going to get crushed. And not only that, you're going to you're actually doing yourself a you're doing harm to yourself, because you will end up being a very nervous and emotionally compromised trader that cannot deal with the situation because you don't know what to do in any situation. You're always doubting yourself. You don't know anything what's up or down, right? Okay, so I thought that was a great opportunity to clarify that a bit, and I hope that, especially you, Betty, because you raised this question in the last session. I really hope that this is a better explanation that shows you where the difference is, and also how you for yourself you have to decide for yourself what level you are actually trading on. Okay, are you up to that or are you not up to that? And this is one of the hardest parts, because what I said before as well, one of the hardest parts of trading is that you are your own coach. That is really the most difficult thing. Where you would actually need a coach to tell you to just like give you a kick sometimes, wake you up from your dream, and tell you what you need to focus on, and how you are actually not being serious to yourself. All these things you don't have in trading. You have to tell that to yourself. This is very, very difficult. This is why psychologically it's such a hard game. Okay, so don't jump too fast on that. There's nothing wrong with just telling yourself that you are not up to a certain level and that you purposely don't do something about it. You don't close the trade here, right? But you can take a note of it. You can write it down. That's okay, but just don't do it. Live through the thing. Okay, enough about that. So, all right. Quickly, what is here? From number 3, ego took over. Okay. Traded to lose the loss. Yes, to get rid of the loss. Tony is saying, with bad experience, you will stay in a vicious negative cycle. That is so true. That is so true. This is so important. And this is why I'm always trying to tell you guys to not go too fast into too advanced directions, because that is exactly what will happen. Okay. Thank you, Tony. Great comment. Anyway, so number 3 here, ego to go traded to lose the loss. So you were trying to get the loss back. Okay, nothing wrong with that. You were stopped out here. You have every reason to take another trade. Now let's look what happens here. You're going short here. All right, 2 lots, and you get stopped out here. That is too bad. Let's take a look at that. Re-entry on the bottoming tail bar takeout. I don't see a bottom tail bar here. Taking profits here, okay, but there is no new low yet, and then being stopped out here. Yeah, well, there are some things we can talk about here. First of all, let's take a quick look at what we see here. You see this, right? See these moves? See these whales, successive whales here? So the last part is this one here, okay? See that? This has pretty solid red candles. So although it is the third leg down here, it has some flow to it, okay? And look, here we are at 50%. See that? Also, what we are at is the MA200 here, coinciding with that, right? And look, we even have the MA20 here declining. All these things are coming together here. You guys see that? So we have several things here coming together. We have a push down here. We have a pull back up. This looks like a pullback, right? Look at all the tails here. Some people call that flying candles. And that pullback goes to halfway, where it also happens to be the MA200, also happens to be the declining MA20. So this is a great short location. It's a great short location. But what did Mikey do there? Stopped out. Exactly where the trade actually should be starting, right? Now, but I get it. You got in here. This is very small, but then again, the risk is very small as well. So I can see that you give it a shot here. I can see that. Okay. It's also a matter of style. What I like to do in these situations often is to put the stop here and give it a chance to develop, because if this is really a push down, this is like the 50% here, right? You want this trade to, you don't want to be nicked out on this pullback. That is basically the story, okay? So you really want to go for the new low, okay? Anyway, you did re-enter, which is nice. This is actually a good trade here. I like this one much better than this entry. This entry is really not very attractive to me. But here you really have your location, and then you cover on the new low here. Well, the new low is really here, right? That is this bar. Okay, wait a minute. It's not too bad. It went down, it went back up, and you decided to cover anyway. That makes sense. That makes sense. You lost the new low. That made the new low. It came right back up, and you decided to cover here. That's okay. Stop. I think stop is still here. Not sure where the stop is actually, because you re-enter here, but you don't specify the stop. And also, I see no further stop adjustments. I do see a profit take here, but the last lot, I recommend that all of you that you really trail that one out, okay? Don't take profits on your last lot. Always let the stop do that for you, okay? Marilyn is asking, what is the definition of cover? Cover is the term that is used when you buy back your short position, okay? So for example, suppose you go short here, okay? Here. So this GBI triggers, you go short one lot, -1, right? Short meaning that basically what is going on is you're borrowing a lot from somebody. You pay a little fee for that. You borrow a lot, and then later you close it somewhere here. That close is called covering. You're covering your short position. Okay? That clear? So if you're in a long position, you sell. If you're in a short position, you cover. Does that answer your question, Marilyn? It's just terminology. Okay. All right. So anyway, to get back to this, it's a biggest loss, but this is a biggest loss here. I'm focusing on this part of the trade here. This is a biggest loss that is, I think is perfect. Okay. You did great because you stuck to the plan. You just did what the plan told you to do. And this was just one of those 3 out of 10 times that it didn't work. In 7 out of 10 times it should work, 3 out of 10 times it won't work. This was one of those 3 times that happens, okay? And I think there was a great lesson here as well that if you have more experience, this is a great place to close this trade, but only if you have made it to that level, okay? Ali is saying, when you trade according to 50%, where do you enter? Before, on, or just above the 50 cent? And neither one of that really, Ali. What you should really do is use the 50% as like an extra, okay? So you don't really short because it's at 50%. I mean, there are ways to do that, but now again, we're getting in advanced territory. You can pyramid into a position like that if you know what you're doing, but you can also blow up your account if you don't know what you're doing. It's advanced stuff, okay? So I'm not going to talk about that. What I'm going to talk about is that you should really look for what is like a primary reason for the trade, and that is here, the MA200. See that, Ali? This is really the reason to short here, especially because it's actually coinciding with the declining MA20. So these are your 2 reasons for the trade. This is your main location. And look, we also have, lo and behold, we also have a 50% level here as a 3rd location qualifier, if you want to use that term. Do you see, Ali, what I'm talking about? The main reason is really the 200 and the 20. The 50% is just, it makes it more juicy. It gives you extra confidence that this is a great reason for a trade. Okay? All right. Okay, so then you're welcome, Micah. And was there another? And Tony is saying, experience for us is practicing your checklist the right way over and over. This is so true. This is so true. And most traders don't allow themselves the time to really do that. They want to start making money. So after a couple of weeks, they just start to to close the trade because this is not going anywhere, or to do all kinds of other action interfering with the checklist. You never give it the chance to work for you. Okay, so don't be that trader. That's my strong advice, and that is more than enough. I said more than enough about that. Okay. Okay, I wanted to have a quick look at this this trade. This is Niaz, right? Niaz Hussain. Quick look here. Is that you, Niaz? Are you with us today? I see you in the list here. Maybe I'm pronouncing your name wrong. You're there. Okay, yes. All right, Niaz. So you sent this on to us as a journal. And I hate to break the news to you, but to me, this is not a journal. This is not a journal, and I'll tell you why. The point is that all I see is buys and sells here, but I have no idea what you're doing here. We do not know what you identified for the trade. We don't know what location you saw for the trade. We can only guess if this is an anticipatory entry or something else. We don't know where the stops are. The stops are the most important part of the trade. They're missing. Okay. You took profits here, but why? I don't know. I have no idea. How much profits did you take? Probably all, but maybe you were still in the. Oh no, you're still in the trade here. Okay. So where's your stop adjustment? You see. So this is. Oh, you did copy it. Okay. I'm sorry. Okay. Then something must have gone wrong there, because I don't see any of those reasons, unfortunately. So anyway, let me go quickly over this trade. Maybe you can tell me what you saw. What is the name for your event here? No, we can do it now live, Nias. I think will work out fine. Just tell me what you have. You have a bull elephant here. I agree with that. Yes. Location? What location is this? Here's your Fab 4, right? Double plus. No, I would think this is, to me, this is single plus. It's still very close. Look, it's actually originating here, more or less from the Fab 4, you see? Very close. So single plus is what I would call this location. Yeah. So how did you enter into this trade? By confirmation or anticipation? I think this is anticipation, right? Okay, very good. And then last but not least, where is your stop? Event stop. Perfect. Excellent. Okay. I think this is an ad, right? And I think the reason for the ad is a hidden RBI here. Is that right? Yes, RBI ad. Okay, hidden RBI. And there we go. And then you have, what is the reason for this profit take? Now we're doing well, Nias. It's going really well. What is the reason for this profit take? Whale complete. Yes, okay, because you have a pullback here. Okay, whale complete. If you say whale complete, you could already take profits here, right, in this bar, because here you make your new high. Here it is. And then you can take profits a little above that, maybe on the follow through here in this bar. This is pretty late for a whale complete. It's not wrong, because you can take profits whenever you want, provided that you have the right to do so, of course. But you have like how many lots here? 2 or 3 lots? 3 lots, right? Try to take profits above the fat bar. Okay, well, actually that is very good. That's very good. Okay. Okay, fine. What about your stop? What do you do to your stop now? Oh, you took 2 lots and you put a pivot stop. So the stop goes here. Okay, stop is here now. And what's next here? What's the next step? Trail out, okay, but how do you trail out? What stop are you using here? Okay, you move to the pivot stop here. All right. And then probably another pivot stop here. I see it now. Okay, and then you got stopped out here, right? Okay. Yeah, actually, this is great trading. I really like this. I think it's a great trade. It is. It's just following the checklist. You just followed all the steps here. So I think it's great. What you could have done after you have your whale complete here, you can also opt, especially after we get here, to just trail the last part on the MA8, right? You could also do that instead. You could have got out a little earlier here in this case, but it wouldn't have made much of a difference. All right? Great trading. There was a question by Gourmet saying, would you call such a small pullback a pullback or ignore it? Yes, I would call this a pullback because you see it's going down here. You see, it's actually pulling back. Also, this is after we have 2 green bars here. If this bar would not have been here, we have only 1 green bar. I'm reluctant to call whatever happens there a pullback. Why? Because there's no lag. A decent pullback is always preceded by a lag up, right? And a lag consists of a minimum of 2 bars. Okay, a lag. Well, you can have a one bar lag, but it has to be really, really big. If you have a huge bar, you could consider that one lag, of course, because you can cut the bar in 2 or 3 pieces. Okay, but in itself, a one bar is not enough to call something a lag. But 2 bars here, I'd say, yeah, this is a lag. You have a little pullback here, so you could definitely add here. Yes, you could do that. Definitely add here. Yes. Okay. All right. Okay, so nice trading, Niaz. And maybe a better, if you send me PowerPoint, I think I remember sending PowerPoint. Actually, it's better to just send a screenshot. I mean, after you work the whole thing with arrows and whatever you put in there, take a screenshot and send us the screenshot instead of a PowerPoint document, because that is like much more complicated also for us to open and get in there and whatever, right? So maybe that's where it went wrong, okay? Anyway, thank you for this trade. The next one here is by Victoria. See, yes, you're here, Victoria, right? Good to see you again. Let's take a look at this trade. Trading Intel here on the 2 minutes. Max loss per trade, $75. All right. And we have our trap zone here. Let's take a look at that. So we have the MA200 here. And then how do we look at the trap zone? Well, basically, we're looking at these swings, right? That is really what we're after here for like the last hour. So to me, the trap zone is really here, the lower end of it. And the higher end is like here. Would you agree to that, Victoria? It's a little smaller than you are suggesting here, I think, in your drawing. Okay, it's a little smaller. That is important because it does also determine when you want to get into this trade, right? Because you see this big bar here, which is actually a bear hybrid. I like that. This is a bear hybrid. I'll talk about that in a minute. And as soon as it gets below this level here, you could actually enter, depending, of course, on whether we're 1 minute into the bar and things like that. Okay, so bear hybrid. Yes, what is a bear hybrid? I'm not sure everybody knows that, and it's good to quickly look at that. So what happened here is this bar went up first, right? Trying to break out of the trap zone and above the MA200, and flips around here and goes all the way down. Now what we have here, this part of it, the tail part, is like elephant size, right? This is a topping tail bar. Let me draw it differently. This is like a topping tail bar here, okay? Big tail, tiny body. And it's immediately followed by another elephant bar. Okay, so a hybrid means really big. It's like something like this. Topping tail bar, elephant bar on top or below. This together in one bar, that's a hybrid bar. Okay, it's a little bit of both. It's a tail bar, and at the same time, it's an elephant bar. Okay, so we have a big failure here and a reversal. So this is a good reason to get into this trade as soon as possible. Okay, so this is why I'm paying attention here to the Fab 4, because if you like sort of ignore the tails, this is the point where you can get in. Anyway, you are taking an anticipatory entry, which I like. Question, is it actually necessary here to wait for the Fab 4 to be broken? Is it necessary to do that? I mean, normally we don't trade in the trap zone, right? Or at least we recommend that you don't do that because it's causing you more trouble than not. However, in this case, you could actually enter a bit earlier also, because this is a very violent move, right? This is very violent. Look at that. This is all red. This is all red. And it's even including an important failure at a great location. So this is a very strong rejection event here. That is very violent. Tony will talking about violence here. This is a great example. Violent reason to enter even earlier into this bar. Okay? Anyway, in 2 lots here. Stop loss event here. Good. Let's take a quick look. In at 68. Stop at, well, 98 something, so 30 cents. 2 lots, $60 is less than $75. Great. Great risk management here. Then we have a GBI here with an add. Okay, and on the GBI, does anybody see maybe an earlier add here? Is there an earlier moment to add to this trade? Second bar, yes. So basically what we have here is like a hidden GBI, right? Because this bar here went up like this, okay, and then turn around. So actually you can also enter here below, add your, add here. However, always check, of course, your risk, right? That your risk is not getting too big. But remember, you can also use a separate stop for the add here, okay? So Victoria didn't do that. Add it here below the GBI, that's fine. Where is the stop for this add? I don't think it's here, because if it were here, Victoria, now your risk is bigger than your max loss per trade for sure. So I think we're missing a stop here. Missing a stop here. Is this a separate stop perhaps? Is this a separate stop here? Can you hear me, Victoria? Am I audible? Yes, right? Can I have a 1 if people hear me? I'm not good. Okay, 5. Oh, even better, Tony. 55. Wow. Okay, thank you. Thank you. Okay, so Victoria is not answering for some reason. I don't know. It doesn't really matter. Here is, so here's the stop, right? So I think it's probably here, separate stop here. Then some follow through here. And this looks like a profit take area here. Why? Why is this a profit take here? Anybody, why is this a profit take? Three pushes, 4 pushes? Wow, 4 pushes, okay. We only need 2 or 3 Nias, yeah. Andrew says GBI 2-bar follow through. That's the right answer. That is the right answer. Ah, you're back, Victoria. Okay, good to have you back. Okay, I meant to ask you, the stop for this add here is missing. I think it's here, probably above the bar. Is that right? I'm assuming it's there. Otherwise, you would be violating your max loss. But your stop, you're adding on the GBI here, right? You're adding here when that's taken out. Where's the stop for the add? That's here, right? Okay, yes, exactly. Okay, I figured that's where it was. Okay. Anyway, so here is a profit take point. Why? Because you have a GBI here. And after a GBI, you can take profits on the follow through to the bar that triggers the RBI, basically. Okay. Now, don't like take that two pennies or 3 pennies, but in this case, you see, we are already down considerably, right? You have your GBI and you get your follow through here. You'd have to take something off here. Yeah, I know it's just a few, it's not much, it's like 10 cents here, but you cannot ask the market to give you 20 cents when you want that, right? That's not the way it works. It gives you money and you have to take it. You cannot say, I want more. It's not the way it works, okay? Somebody said 2 or 3 pushes. That is a good one. Look at this. How would we count that? Always when you look at 2 or 3 pushes, you have to start counting pushes from the optimal entry point, right? Now, the optimal entry point, in my opinion, is like, if this is the low end of the trap zone, is like roughly here, okay? At this point, this is where the optimum entry is. So that means that we have like 1 push already in the first bar, okay? We have a second push here, because this bar was totally red at some point here, okay? This is like a second push here. So this is actually the third push here. Okay, this is the third push. How much in money would that be? 76 to 56. That means 20 cents. Okay. I think 20 cents on a $50 stock like Intel. Intel's not very volatile. I think that's okay. Okay. 20 cents is in this case, I think is okay. But if you didn't take your first profit here, then you definitely have to take it on follow through after the GBI. You have to take 1 lot off. Also, because you have 3 lots, right? It's time to use one, basically, also to make sure the trade is safe. Okay? So, optimal entry point here, 1 push, 2 push, 3 pushes, 20 cents, okay. It's borderline, I get it. So maybe you don't want to take profits, fine, okay, but then you have to take profits definitely on follow through to the red bar here after the GBI. Okay? All right, now bouncing up. Bouncing up, your stop is still here. All right, and then we go down here, and then at 4 here, I think 4 is here. That is the moment when you move your stop down. That's good. That's good because you allow the stock to go down here before you move the stop down. And then finally you get stopped out here. Stopped out from your loss. Oh, sorry, I missed an ad here on the pullback. Okay, ad on the pullback. Okay, we can talk about that. Let's talk about that. You're going to be stopped out here. So, $30 loss, not bad. It's not bad, but it could have been roughly break even, I think, had you taken profits here. Okay, that would have been better. Now, let's take a little look at this. The bounce. So we have the bounce here. Okay, what about this bar here? So checklist-wise, we just discussed the trade checklist-wise, right? Just plain checklist. It's okay. You get stopped out there, done. Okay. This bar is, Victoria says it's too big. No, it's not too big. It's big, but it's not too big. It's just a big bar. It's a fat, big, ugly bar. It's the kind of bar you really don't want to see in this situation, right? This bar, look, if you ignore the tails here, take this tail off, take this tail off, take this tail off. Look, this bar on completion is taking out 1, 2, 3, 4 bars, 1 push here. That is scary. That is not nice, okay? So what do we do with that information? As I said before, 1 strike against me, okay? Just take note of that. Just, if you want, you can actually put a check mark somewhere on paper, but you don't take any action, of course, okay? Now, here, this bar, what does this bar tell us? The next bar, what does it tell us? Anybody? What is going on there in that bar? RBI, okay, but what is that bar actually trying to do, and what is it accomplishing? We're doing candlestick poetry here now. Eh? What is going on? I'll tell you what's going on. No, this bar, look what happens. This bar is trying to do what? This is an attempt by the bears to take back control, right? The bulls are making it move up here, and then the bears are trying to take back control here. And what happens? They fail. They cannot take the low out. They can't do it. They reach 2/3 and they bounce right back up. And what happens next? Follow through on that bar. Woo! We had a check mark already against us, right? You guys think it's fair to put another check mark here now? Because that was not nice, what we saw there. This is not what you like to see, right? Okay, so now we have 2 check marks against us here. Also, what we have here is, see this green fat bar, right? What is this? This is a support area, right? That body of a big bar here is support. So if you are doing anything here, you're shorting straight into that support area, right? After a nasty threatening bounce. Two Betty, because the first one is the green bar. So first is the fat green bar, okay? That is not nice. It's actually a clearing bar in the sense that it takes out 4 bodies of the 4 previous bars here. I don't like that. And the second thing is this bar here, this red bar, trying to continue to the downside and failing to do so. You can't do it. So it's a failure. That red bar is failing to complete the bear 180 here. This is like proof that the previous bar is serious trouble, okay? So 2 check marks against this. Okay, so adding here is not wrong because the checklist tells you to add on the pullback, right? You have to do that. So again, you have to ask yourself and take a clear decision at what level is my development. If you consider yourself at the beginning level of development, mastering the checklist, and I won't go into detail, but I think for most of you that would apply, okay? Then you will just add here. That's a good add. It's fine. However, with a bit more experience, if you can read this without your emotions scaring you and trying to kick you out of the trade, okay? If you can just read this information and you have those 2 check marks against you, then you may actually want to skip this add and say, well, this is just not looking good. I'm not adding here. See that? Is that clear? See again how it depends, all depends on the level of development that you have chosen for yourself. Okay? All right. So anyway, adding here. Now we go down here. And what do we expect at this point here? What do we expect at this point? A new low, exactly. Expect a new low here. Actually, it makes a bit of a new low if you ignore the tail here. Remember, for new highs, new lows, you can ignore the tail, right? So it does do that actually, but it bounces right straight back up here. See that? So what that means is that basically this is like maybe not here, but definitely here. This is a 3rd strike, okay? Perhaps even here. It depends a bit on how you want to deal with it. Okay. Now you have 3 strikes against you. Failure, significant new low. Remember, the correct terminology is not failure new low, but it's actually failure significant new low. It means it can actually poke a new low, but if it bounces right back up, that's just as bad. It's the same thing, right? So let's finish this. So pure checklist trading, right? Your stop is here. You may not see all of this. And even if you see it, you ignore it because you know you're not ready up for it, right? So you add to the trade, everything fine, and then you get stopped out here. That is version number 1, okay? Version number 2, you understand that, first of all, this bar is a big problem here. Check mark number 1. then you recognize that the next bar is trying to follow through to the downside and it fails. Check mark number 2. Okay, and now you see that the market actually it fails to make a significant new low. It pokes through here and comes right back up. So now you have your third check mark here and you can close the trade with enough experience. Okay? Any questions about this? Yes, Carla says, Jan, in the first bar you mentioned the entry could be just below the 4, but sometimes the bar returns. So we need to wait for 10 or 15 seconds previous to the 2 minutes, isn't it? Sometimes it's difficult to enter just below the Fab 4. Well, yes and no. It all depends on what that bar is telling you, Carla. Look at this. Would you say, because this bar starts at the top, right? So let's say here is the Fab 4, right? So this is actually what your bar looks like. It's hard to. Would you say, Carla, that this is convincing when you see this bar like this? Is this convincing you that this thing is going down? Yes. In how many percent of the cases? How often will this thing follow through, do you think? Just give me an estimate. It's not about a real number, but I just want to see how we can look at this. Yeah, like 80%, right? Let me ask you the question in another way. How often will this high be taken out anytime soon? I'm not talking at the end of the day or in 2 hours later, but I'm talking in the next half hour or so, the next 15 minutes. How often will this be taken out? 10%? Yeah, with the Fed daily maybe. Okay, yeah, things happen, right? We used to have some president tweeting all the time and doing the same thing. We have the Fed coming up with all kinds of news and everything. It's true. It happens more often these days than it should. I totally agree with it, but it's still rare. It's still rare. In by far the most cases, it goes down. Now, Carla, trading is a game of odds, right? It's all a game of odds. There's no certainty there. You cannot know what the market will do. All you can say is that if you trade this bar here, if you go short here at this point roughly, okay? If you short here 100 times, you take this trade here, right? You should end up with like 70, 80% winners and 20, 30% losers. No, not even necessarily losers, but 20, 30% where somehow you will be able to get out of the trade here. And then in like 10% of the cases, okay, you will be blown out of your stop with a big loss. That's right. But do you think that those 70, 80% winners here will compensate you for the losses? Well, I certainly hope so. That's the whole idea. See that? So you have to accept the loss. You have to accept that you will be stopped out sometimes, that in other times, let's say let's say 10% of the time you get stopped out, maybe in 20% of the time you will be able to get out of this trade, maybe because you see a double red failure or something, or maybe it bounces up more than 50% and then goes back and gives you a chance to come out with a smaller loss, things like that. That's like 20%, right? And in the other 70% of the cases, you will come out with a win here. So at the end of 100 trades, or the end of 20 trades, you will be very profitable. And that's the way you should look at this, Carla, right? You accept this loss. You take it. When you get stopped out here, you celebrate, right? You don't mourn. You don't feel like you just lost a friend or something, or a dear relative. No, you actually, the way you should feel about it, you should celebrate that you got one of those 1 in 10 times, because you know the other 9 times it's going to be better. And that's what you're going for. Okay? All right. I hope this helps. This is the foundation of trading, guys. It's a numbers game, right? And this is at the same time is the hardest thing for traders to accept, because all of us always feel this urge to fight those individual losses, to battle that one time that it doesn't work. That's what we're focusing on all the time, instead of focusing on the 9 times that it does work. That's what we should be doing. Just accept the losses. It's okay. All right. So Victoria, finishing your trade here. So you got out with a small loss. As I showed you, had you taken profits here, this loss should be roughly 0 probably, right? And depending on your level of development, and really this is something you guys, everybody should think about this tonight, right? What is my state of development? Then you take a decision on that and you stick with that for the next 2 months, okay? You don't change it. And tomorrow I do something else. It's important that you do the same thing all the time for a long time. So depending on your state of development, you could actually close the trade here, get out, okay, and perhaps even skip this ad. If not, you get stopped out here at break even, okay? All right. Next trade by Vladimir. Gurmeet is saying, I believe 2 color loss and failure to significant new low are beyond the checklist. I did not see that in the checklist discussions earlier. Am I right? Yes, Gurmeet. Actually, I think that's right. That's the right way to look at it. Those are like it's like decoration to the checklist. Those are the extra rules that you can actually add to your checklist once you are to the point, once you have made it to the point where you're up to that. You see? Once you have mastered the bare checklist, then you can add those things. Okay? All right. So Vladimir, let's see, is he here? Yes, Vladimir's here. Hi, Vladimir. Max loss per trade, $90. Excellent. Trading here, let's see, where is he trading? He's trading, okay, later in the morning here. Okay. But Vladimir, I would still like to see that Fab4 here. You see, I don't see it. I don't just see a couple of bars here, and in a way, it's still relevant. You know, I don't know. In particular, I would like to know: is there any point here? Is there any swing here that maybe marks the top of the Fab4? Because if there is, for example, here, you see that is important information, because that would explain why we see the bounces here. See that? That could be a support point. So next time in your journal, make sure that you draw in that Fab4 from yesterday, okay? And especially the congestion zone. Okay, so this Verizon, this is Verizon? Yes, I think it's Verizon, right? Going up, pulling back here. Is this a good pullback or a bad pullback, people? Traders, what do you think? This pullback here, this is definitely a pullback, right? Is this a good one or a bad one? Victoria says it's a bad one. Anybody else? Any opinions here? We have freedom of speech here. You can say whatever you want. Bad one, Cynthia. Good one, says Jill. Michael says it's good. Betty says it's a good one because it's about 50%. I like that, Betty. I like that. Because look what we have here. This is the way you should look at these things. Look, here is your move up, right? This is the move up. And here is your 50%, okay? A pullback that stays in the upper 50% is a good pullback, right? It's a good pullback. And Neil says it's a more than 70% pullback. I don't see that, Neil, because look, this is the low of the day here. And this is your high of the day, right? But this is roughly 50% here. To me, this is a 50% pullback, roughly. 50 means like, let's say, between 40 and 60, okay? Or between 55 and 45, something like that, order of magnitude, okay? Okay, you agree, great. So, 50% pullback we have here. So this is a great pullback. The only thing about this pullback that is maybe not the nicest thing is this little bear 180 at the top, the way it starts. That is the only thing. But that doesn't mean that you could just say this is a bad pullback. That's not good enough. As a matter of fact, what you should be looking at is this here. This bar, see that? This bar is actually throwing support here. It's throwing support. And where is it throwing support? Where is it meeting another support? Look at the MA20 here. See that? See how the shadow of this bar is meeting the rising MA20 here. Wow, that's a great location. And what else did we have again? Oh yeah, we had a 50% here also. See that? Do you see how everything is coming together? Do you guys see that? There is a lot of things coinciding here, location-wise. This is a great location. Okay. So anyway, so Vladimir is trading here. He sees a VBS. That is, a VBS is actually nothing else than a pullback to the rising MA20. Okay, that's all it is. Well, sees that. He says, I have a retracement of 40, 50%. Exactly. We just figured it out, right? Now he's going on an anticipatory entry. This I do not really like. This I do not like, Vladimir. Because what I want you to do here is, I want you to play an event. So you cannot just enter because you say, oh, I have 50% and I'm just piling into the trade. Okay. I know Oliver does that sometimes, but that is a different style. That's more advanced. Also, the question is, where is your stop then? Because if Oliver does that, his stop is probably here because he has an account that he can afford that. He will be buying all the way down and work the trade. Okay. But you can't do that. You have to really play by an event where you know where your stop is. So in fact, I think here's your event, this bottoming tail bar, right? So you could actually enter above here, above the bottoming tail bar. That would be the appropriate entry. This is really too early. There's no reason for anticipation here because we anticipate when we have a big event, right? Plus size event. I don't see any plus size event there. Do you? I don't think so. Do you understand the difference here, Vladimir, between just entering in the trade because you say, oh, we're at 50%, which requires totally different stop management and different account size, pyramiding style. Blow up your account if you make a mistake, right? Or just trading the event. Like I'm telling you, trading the event above the bottom tail bar here. Yes, I thought the red bar takeout was okay. Here, I can see that you enter above this red bar. Okay, that you don't wait for the bottoming tail bar. That's fine, but you're still below that. So you're just basically by entering already here, you're hoping that it will be taken out. You see? So try to be good with these events. Okay, so now you're in the trade here with 3 lots long, and here is your stop, right? And you're being stopped out here. What can you do about that? Is this a good stop out? Or is there a reason to do this slightly different? Is there anybody who can think of a way to prevent this stop out? Ali says double dip. Yeah, but that does not apply here, Ali, because the double dip is, you can only, it is a double dip, absolutely. But there's not much you can do against that. Only when you're in the trade here and your stop is here, then you can say, I will wait to pull my stop up until I see the double dip, right? Or I know it won't come anymore. But he didn't do that. He didn't do the first leg. He's actually entering on the pullback. So you have to put your stop somewhere else, right? Okay, I see 2 good suggestions here. The first one is give this trade a little extra room. You see this big bar here, right? We're in the shadow of that big bar. So you know that all of this is support, right? Support, support. So Vladimir is being stopped out straight in support here. That is usually not a very smart thing to do. It's better than to put the stop below that bar maybe, okay? That is a great suggestion. Always look to the left in any chart. Take a look at the left, to the left, to the left. You see this big bar here. It's helping you. It is actually defending you. So you use it. Put that stop a little lower, okay? That's one suggestion. The second thing I like is 2-bar stop. 2-bar stop. When is a good idea to use a 2-bar stop rule? What is a great situation to use a 2-bar stop rule? Pivot, okay. MA, yeah, okay. Pivot, stop, moving average trail. That is not what I'm looking for. What I'm looking for is, and this is a rule that you may want to add to your own checklist. Okay, so so after those 7 points, you can create 0.8 maybe, my own additions. Okay, and you have to be very careful with that. You cannot just add something every day. That you do once every few weeks. If you have 1 point that you say, well, this is really interesting for me to add. Okay, and one thing I have in my checklist is that I will use a 2-bar stop whenever my stop ends up in support. So I see this as a support area here, right? To me, all of this is support, okay? Because of the big bar here, right? The big bar tells me support. And that means that this stop here that Vladimir is putting here, which seems the logical thing to do, but he's putting it exactly in the support area. Meaning in the area where, and that's what you see here, the trade goes down, it bounces right here in the support, exactly where he's being stopped out. Do you see that, Vladimir? Do you see what I'm talking about? Just as as the helping troops here are coming to help you, you're just being nicked out of the game here. Okay, so one of my rules, my own rules in my checklist is whenever I am in an area of support or resistance, whenever my stop ends up, my event stop ends up in an area of support or resistance, I will use a 2-bar stop rule instead. That means that I let it take me out one time, right? I mean, I let it break once here, and then I will be out one penny below. So here, that would not have helped you if you had your stop here, right? Because here it goes below, and then you get stopped out 2-bar here anyway. So it wouldn't have worked, okay? It wouldn't have been good enough. So the best thing to do is to look to the left and see that close to your stop, there's actually a much better situation for a stop here, and then you use a 2-bar stop on this one. So if it would poke through here, you take your stop here, and this is where you will be out, okay? Use the chart to your advantage. That is the whole trick about trading, that you learn to read. The chart is telling you where actually the potential turning points are, and you have to learn to read that and see that and then trade around it, okay? So you're in here, you're being stopped out here. Too bad. Strictly speaking, I understand exactly what happened, but try to use this kind of information in the chart. Then you re-enter here on another VBS, recognizing that this is apparently a double dip, right? Double dip. There you got it. That's a good observation. I like that you see that. That is very nice. So now, you expect this thing to make the new high, right? And it goes here, and you just maintain that stop. Okay, I get it. There's not much you can do here really, and you're just being stopped out in the end. That's unfortunate. It's just unfortunate. Is there any stop here that anybody sees any possibility maybe to move the stop after some point? Is there any stop that we could possibly, Niels is saying MA stop. I don't see any MA stop here because you need a power trend for that, Niels, and I don't see a power trend here. I just think it's just flopping up and down here. Color stop, and yeah, maybe, but doesn't really make a big difference here. Could do that. A time stop, yeah, maybe a time stop. But the problem with a time stop is also that you really need something to go sideways, right? It's just going up here again, and it goes down again. I don't know. This is just very difficult. I could see that you, at some point, you move your stop here, for example, because it just has to go. And it's not going, so when it goes below here, maybe you could be out here. Very difficult. this is typical summer trading, you know. It starts with a nice move up here, and you think, wow, today's going to be a great day. And then it just pulls back, and it just peters out, basically, and you're hanging in the trade. You can't really do anything about it, right? Andrew's saying, can profit take at 1048 NH? 1048 NH for a new high. 1048. Ah, here you mean this. No, not really, because look, this is what you're trading here, Andrew. Look, this is what we're trading. Double dip. So what do we expect? This is what we're going for. This is why we're in this trade, because we want to get out at a new high here. That is the plan. This is not a new high. This is nothing. This is nothing. Okay? So it just didn't work. It just didn't work. There is a lot of trades these days that work in the beginning of the day. It works. The first 20 minutes is the best time to trade at the moment, in my opinion. Okay? After the 20, 30 minutes, mostly the markets peter out and it's over. It's very difficult to make money later in the day. I'm not even trading later in the day recently. Sometimes I do on my practice account. I'm not risking anything there because it's very rare that there's anything going on later in the day that I can profit from. I mean, there are some trades sometimes, suddenly then something happens. It can happen. But most of the time, there's really nothing going on. And it's just very easy to be stopped out. That's my opinion, my experience. Okay, it really, at the moment, I think really the best power is at the start of at the open. That's where you can make the money in most cases. That's my personal opinion. Okay, this is a great moment to move over to Tyler because Betty is ready to ask a question to Tyler.
Okay, I'm here.
I'm already way over my time.
No, Jan, that's
I apologize for that. Tyler, take it away. Good luck.
Okay, thanks, Jan. Good job. All right, Betty. Before I go into stop and reverse, why don't you
trades,
ask your question?
Each trade, Tyler, was like treated like 2 or 3 trades, so it's 4 times. It's like 10 trades that I did.
Okay, that's right. So Jan turned each one into like 4 different trades, so that was pretty cool. But no, it's good stuff. Good stuff. So, Betty, you had some questions. So why don't we start with that? Let's see what we got here. Marilyn, yes, as long as you have the link, you should be able to get those sessions, which we have the links emailed to you. So, yeah, I think you'll have access to those. And let's see, I guess I better start projecting here. That's what's going on, is Jan's still projecting. I gotta change that there. And yeah, let me know, Betty. You guys can hear me, right? You want to give me a sound check? Okay, good. All right. So, waiting on a question from Betty, and my screen sharing is trying to connect here. There we go. I put up Uber here so that we could talk about stop and reverse, right? And this is going to go well with what Tony's going to talk about today, which I believe is violence. So is stop and reverse one of your questions, Betty? So this is a great example of one today. Today is a lucky day for everyone because we've got a great example of a stop and reverse, and then we got another example of when not to stop and reverse. So it's perfect today. So this one, Uber, is this not a perfect bull elephant bar? I mean, I was looking at it. I almost got into it myself, but I was in Apple. I got an anticipatory entry on Apple. But Doesn't get any better than that, right? Doesn't get any better than that. And looks like Betty even saw this and she added here, right? So you're probably long 2 lots, and then you got an add right here, and then it did everything that you didn't want to see, right? Yeah, Tony was in it too. All right, Apple got the apple. Nice. Now, this looks very orderly in terms of a fabulous 4, right? But there is some space here, right? And it's worth it to note that, from the prior day's close down to the 200, it's not like 10 cents. It's like 60 cents, right? So what I'm talking about here is if this is where the 200 is, and the 200, remember, is the most important of everything in the Fabulous 4. It's the most important. And I'm talking about this distance from here to here, right? This distance is about 60 cents. And it's good to note that. For Uber, that's a significant amount. It's not insignificant, right? So the way this rule works is this. When you have a powerful first bar and you take your entry, and that bar is immediately or almost immediately reversed powerfully. And I mean, this is a 100% wipeout. It's in the next, bars 2 through 5, let's say. You get this powerful wipeout. You're allowed to take your position and flip it and even increase the size. Oliver would say, this is your, stop and reverse is not a choice that you get to make. Stop and reverse would be number 8 on your checklist. And that is when you get a powerful, almost immediate reversal, you would say, close the trade, flip the position, and double the size. That's how we first taught it to us. So if you were long 2 lots, and then this happened where you get this almost immediate wipeout, you would hit the sell button. It would be 6 lots, right? So the first 2 would close this out, and then basically the last 4 would be your new position. So you would end up being -4, right? This is how much you would end up being, right? Once you get into break-even territory, you have the right to take some off. Take off 2/3 or whatever. If you're -4, take off at least half. Maybe even 3/4, right? Because what you've done is you have wiped out your loss, right? And you should have some certainty that most of the time you are going to get follow through. And you need to have some space. I will say this. If you're just going to crash right into the 200, that is not a good place to do your stop and reverse. But if you did this and, and I would say if you've already added, that does not mean go short, adding the shares that you've added, because you do have to pay attention to your max loss per trade and your risk amount, because it'll hurt really badly if it then shoots back up again. It'll hurt really, really badly. But you will find that if you get this set up, 8 to 9 times out of 10, you will get all your money back. And this is a way to turn your losing trades into winners. But you have to make sure that this is power. And the way that I like to describe it is that, if this is one fish coming along, right? That's the best fish I can draw. And this fish is swimming in one direction, and that's our first bar. It needs to be swallowed whole by an even bigger fish, right? And that's a terrible fish, but here we go. This fish needs to be bigger than the first one. It needs to feel more powerful, right? This should feel like it just engulfs this whole thing. And from here to here is even larger. And then you go, this has more powerful than the initial move, right? You don't want a stalemate where it just freezes at the bottom. You want a bigger guy to come along with big sharp teeth and take over, right? So I'm pretty impressed with my drawing there because I can't even make numbers with a mouse, but that's what you want to get, right? You want a bigger fish to come along and swallow that trade, and you're gonna feel it. You're gonna go, yeah, this just killed the mood. I was so excited with my bull elephant bar. And by the time we take out the bottom of this green, I am just not interested anymore, right? That is the perfect stop and reverse. And again, it's not a choice. It's just I have space to fall. The 200 is way down here. If I flip and double the size and this makes it to the 200, I'm a happy camper, right? I mean, look at it. This distance from here to here, if it's equal to the distance from here to here, it's definitely worth it, right? Like if this takes out the green, it's very likely we'll at least make it to the 200, right? And if you get out 3/4 after 2 to 3 pushes, something like that, and just leave one on, so you take profits somewhere around here to get your money back, and you let one roll and get your whale complete and just get out right there, that's a pretty good trade, isn't it? This is a way to make the ones that just slap you in the face. I mean, Oliver just talked about it. It needs to feel like you were just punched in the gut. Like if it happens that immediate, it's totally, it's totally appropriate. Yeah. Tony's got it right. Trade target 1 is break even, target 2 is the 200, target 3 you just let the checklist play out, right? And in this case, here's a good whale complete zone. You could technically stop it out up here after, if you do a pivot stop, but I actually think, look, once you've taken something that was a losing trade and turned it into a nice net profitable trade, just be done. Because if you somehow let this go and take off and turn into a loser again, you're going to go nuts, right? Don't let it become a loser twice. Now, do you have questions about this, guys? Like, and if you can't double your size, instead of shorting 4 lots, short 3, whatever, because you still have to have the stop above the top, right? Ali's asking on the takeout bar, do you need to wait for a minute? Just the second it takes out the low. The moment the low of the green bar is taken out, it's over, right? That's the bigger fish, right? So, and it's just clear that this thing is swallowing it whole, right? It's an even bigger red bar. Yes, Lawrence. You guys need to practice when you have a bigger fish come along and just slap your initial entry. It's no questions asked. Stop and reverse is the way that Oliver would say. This is a no questions asked stop and reverse. And the important thing is that it has room, right? Now, anything taken from like a location double plus or double minus is going to have room. Why? Well, you've labeled it double plus or double minus based on its distance from the 200, right? So there's space there. But when these things are close to the Fab 4 like this, it gets trickier. And that's why we are lucky today, because we have GDX right here. Look at GDX. Look what this did. Oh boy, this is doing that thing. Oh yeah, I got to change my settings. I go in here. If I go like that, then I'll be able to do this. All right. Now look at this one. That is a tight Fabulous 4, isn't it? That is a tight Fabulous 4. And how many people dove into this And how many charts are we going to get where somebody stop and reversed right here, right? So a lot of stop and reverses happened right here. You see that? People said, here's the wipeout of my entry bar. I'm going long, right? They're going long straight into the 200 and straight into a very tight, like, if you shorted in here, does this really give you much space if you stop and reverse? You know that somewhere in here there's going to be some resistance, right? And this is the one you see over and over where somebody stops and reversed, and this 180 of your initial bar turns into a 360 because you end up down here, right? This is the one that'll catch you. If you try to stop and reverse right into the 200, you're asking for trouble. It's right into the trap, right? Just like Tony's saying there. So Gurmeet's also asking, do we stop and reverse after the event stop is met, or can we do it earlier too? And, what I'm going to say is that technically it's when your initial event is wiped out. It's when your initial event is wiped out. I'm going to show you something though, that is a little different than that. This is the only other case that I think you might make that exception. Okay, so forget about all this other stuff. Here's the drawing. Here's your fabulous 4. Just for the sake of what we're doing here. Let's say here's an initial event. Right, here's an initial event. It's powerful-ish. And you went confirmation on this, so here's your entry. And let's say the next bar that comes is like this. It's like clearly the most powerful bar yet to form on the chart. Now, if this was your event stop, and let's say your 200 is down here, because you still have to have space, right? You still have to have space. I probably should have drawn more space to fall, right? More space to fall down here, right? So we'll call that the 200. If suddenly the most powerful bar in the chart forms, that I would call your anticipatory because it didn't take out this low, but it's just clearly the most powerful thing on the chart. You can give that a shot. See what I'm saying? Like, if this is like a climb, and this is a trip and fall off of Mount Everest, you can get in here rather than here. You got it? And I've had that happen where I'm like, I got into something and I'm like, what's happening now is clearly the most important thing that's happened so far. And, and I think a good example is like, let's say you stop and reverse this trade right here. Let's say you went long, like an idiot. You went long right into the 200. And your stop would be down here. And I'm not saying any of you would do this. Let's say you never took the short, but you got in above this red long, and your stop was at the low. If you got in this long at this point, and you saw this bar, like, think about it. What are the chances now of this making a new high? That show is over, isn't it? Like, look at how this was wiped out. I mean, from here down to here, that was violent, right? That move down, that became the ugliest move on the chart. Does anyone disagree with me on that? I mean, it hit the 200 and then it fell really hard. And this suddenly became the biggest fish, right? Now it's shooting its power. Even this elephant bar, ends up getting wiped out. on this move down. So it's like once you can identify the cleanest, most powerful move, that is now the new, that's now the biggest show in town, right? And that's what everyone's paying attention to. So you guys understand the concept that I'm explaining here? It's really that when something appears that is clearly the most powerful show in town, that's when you can flip your trade. And there is also a difference between flipping and stop and reverse. And the no questions asked stop and reverse, and stop and reverse is an increase in size to get your profit back, and flip is different. Flip is the same size, but something has happened that has just changed the whole trade, right? And like I said, nobody would do this, but if you were long and then you saw this red move down, you would go, I am definitely wrong, right? If you were long in here and then you saw that big violent red move down, you would say, whatever I was thinking, I am definitely wrong. And that's when you flip the trade. You don't have to go in big or anything like that, but you would say, I am definitely wrong. So, or maybe you've gone up a ways, right, and you're up high, and now you've got this happening. I think, there's space, right? The 200's way down here. Maybe you're breaking the 20 or something like that. Now you've got something that is not a scalp. This is the beginning of a new move, right? And, it's an igniting move in the opposite direction, right? So you might have been long something into 11 o'clock, and then a violent move starts in the opposite direction, right? Do you need to have distance? Okay, so Niaz is asking a good question. So what I was trying to explain is if you stop and reverse, like in this case, if you were short and you stop and reverse right into the 200, you would just get slapped. There's no room there. So consequently, what kind of a stop would you have been using on this entry here? What kind of stop would you have? Event or max loss per trade? Yeah. If it's the kind of trade where you have a max loss per trade, it's telling you that this is a tight enough fabulous 4 that you're going to just wait and see. It's, max loss per trade means I really don't think this is going to smash through the 200, right? And so that's when you just got to let this one play out, right? So you could get in here. You can easily add here, right? And this is still a new low, right? It's something where this is a pullback. It's not it looks like a wipeout, and it is stronger, but it doesn't really, things that look powerful that just smash into the 200, we got to just let that play out. It needs to prove to you that the 200 isn't going to hold it. That is our reason for using max loss per trade. Oliver developed that over years of flipping it long into the 200 and getting smashed, right? And going, no, this thing's going to hold. It needs to prove that it's not going to hold. Because, this may look powerful, but it's not too terribly powerful. And what happened was a pullback. And often, interestingly, did this movement up start with a violent move or end with a violent move? Yeah, interesting, right? It ended with one. So it kind of had a little reversal, and then accelerated, and then got slammed, right? Perfect 180, right? It's kind of different when the first thing that happens is this. ignition, right? But it didn't do that. This one just, got everybody in, and then it started to climb and to climb, and then it got scary, and then it smashed into the 200 and went the other way. It's just, this is the perfect example of when you just got to let your max loss per trade play out. So I'm glad that GDX provided that for us today. And then Uber, of course, we look at this and it has room, right? It has some room to make it to the 200. That's the important part. If you short here, couple pushes into it, you get your money back here. You take another one off here, and when you trail it out, I hope at the failed new low, you probably get out right there. Okay, Betty's asking, do you have time to explain how to trade only one event, please? Sure. What's the one event? Or do you mean one lot? Just be specific about that. And, we probably won't get to all the journals today, but that's fine. I want to make sure Tony has time. And in the meantime, let's see. I'm waiting for your question, Betty, but I'll look at Snap here. SNEP. There we go. All right. What's your question about this? So, Betty, I think what I was saying is compare positions. If you get an event like this, right? For example, what if we identified the second bar of the day as a bear elephant bar right here on Snap? What position is it coming from? Oh, Friday. Okay, yes, I'll go back to that in a second. I would also give this a different category of igniting from the 200. So I find things that are just where the first bar is actually touching the 200. I find that different than plus or minus, and then taking an entry down here, right? So if this is your 200, right? So take clean events that ignite off the 200 and put them all in a folder. And that's what I mean. Every time you've got an opening bar that ignites off the 200, that's one kind of a trade that you would focus on. Or events that begin at minus position, right? That's a kind of thing. And you're just going to compare everything that's an event, a confirming event at a clear position. And that's what I mean by just take that one thing and trade it. I'm only going to do pluses and minuses, or double pluses and double minuses. And sometimes you're going to have days where all you have is wide fabulous fours, right? So that's a different position to study. Wide fab 4. How far does it go? It's the thing is about setups. Do you do anything to make those setups? Like, is there anything you do to put that on the screen? No, they come to you. And the honest answer is you wait until you have it. And if someday you're not getting any of those things, well, make another study. All right, wide fabulous 4. How do the pullbacks, form? Because what's likely to happen? You're going to get some movement back to the 200 if you have a wide fabulous 4 or something like that, right? It's most likely going to go in the opposite direction. So you make another study of those things that just, maybe you want to study how often a powerful bar fails when you're in a wide state. But usually you can find something that's in a narrow state, Betty. There's almost always something that comes from narrow. And, you know, if you, one thing you could do, Betty, is on those days where everything's like that, you take a few stocks that are in a different, expand your range. Take the IFT 100, and let's say you've got, you go, well, the only thing that's in a narrow state is some stock that I'm not allowed to trade, like, because it's too big for you, like QCOM or whatever, and go, well, I'll just do a one lot entry and just use number 7 and stop adjust it out. You can do something like that and go, instead of going in 2 lots, I'm just going to play trail out and see what happens. So, there are different things you can do if you only want to trade things that come out of a narrow state, but almost every day you can find something. I really think it's hard not to find something. I hope that answers your question. That may not be a perfect answer, but you start a study of one thing and then you start a study of another thing, and you just kind of have to go with what there is there. Okay, so Niaz wanted to look at Snap here. Here's a beautiful stop and reverse, I think, because I think here's your fabulous 4, but if it's going to break the 200, it has room to fall back here. And if you look, you've got a good 50 cents, right? So if you got in anticipatory here and you probably lost 50 cents, but you've got another 50 cents to fall to get to the bottom of this, I think it works, right? It has enough space to fall into. Like, it's not just the 200, it's like this whole zone, right? And the prior day's close and all that is part of the zone, right? From here to here, from the top to the bottom of that, all of it's important. And if you get a powerful engulfing situation, follow through to at least here is likely, right? It shouldn't be impossible for it to get there. It's just when you have everything really tight, So for example, if the 200 was right here, right, and we have this very tight one, and then you have this up and then down situation, I would say that doesn't work very well. It tends to follow through. Does that make sense, Niaz? Do you get that point? I think that's what you're asking about, right? Whether this is a stop and reverse or not. So I think it is. Now, let me get to a few journals if we don't have any more questions about that. But this is important stuff. It's gonna help erase some of the losing trades as you guys get better at this. Let's see here. All right, we got Hamsaraj here. Now this is a tricky one, right? Isn't this a great example of a tricky one? So you can see that we have a bear elephant bar. Now this is another great example of what the trap zone does. It's just doing its work here, right? So we shorted right into the bottom of this trap zone when it didn't really break through anything. It starts from the top of the trap zone, goes up, smashes all the way down, right? We got a nice, now it comes all the way back up, stops up here. It's okay to keep that stop because it really would need to clear this for it to be a stop and reverse. And then we get this little 180 here, and there's an add, and Siraj stuck with it, kept with the plan, added. And then we have a note here that we missed the profit take by a couple of pennies. And I guess there was a violent pullback, and you got to get some off in here. You have to take some off. Did not add here because the pullback was strong. Well, what does that tell you? That tells you that this one is it's not working out, right? And like not taking a profit on this bar is a big mistake. That is just ignoring the checklist, right? Here's your new low. You can't miss new lows, right? And I agree that this was kind of a violent pullback, and I think you already had your pullback ad right here. So this one is not, a subsequent ad. And, once you get your new low and you start getting these things taken out color, it's over. Baby whale, this is a complete whale. Here's the violent move down. This is the first pullback. And this gave more than it should have, right? Getting down here is more than it owed you, right? You got this pullback. You got this ad right here. This is your whale complete. And I would even argue that once we get down here, like, why not use a big bar stop adjust? This one is not supposed to work for you. So I'd just be out because, you didn't really clear this. And now that we're after clearing this and it gives you this kind of violent move up, I think, above here, you just realize this is not doing what it's supposed to do. It gave you a violent move down after being pretty much stuck in the trap zone, and two color rule would take you out up here. But something about this, though, you got your 3 pushes. I think 2/3 has to be taken off in here, and then maybe you trail this out, or you wait and you do 2 color and you get taken out here. So, but it's interesting when you say did not add as the pullback was too strong, and then the question is, well, how long are you going to stay in there? And I think this was that was too much. So, but I like that, sticking with the checklist, wanted to see how far it would go, missed a profit take, didn't add, and kind of let this power trend against you, right? So you learned some lessons from there, and I think that's something that you gotta pay attention to. Missing a profit take is a big mistake. It changes everything, right? And then how worried are you getting, when you start climbing against? So thanks for sharing that. All right, Aka. Let's see. I like this, right? Nice bottoming tail, tight fabulous 4, long 2 lots. Profit take up here, kind of 2 pushes. Fair enough. I mean, this thing isn't exactly exploding. If that, yeah, 50 cents for eBay, I think that actually is good. Yeah, that's a great ad. I'm gonna say this, Aka, like, when you get a small bar crawl, I mean, just let it go. Like, I don't know, like, do you need that profit take right there? I don't know. Like, here's the thing: when you get Oliver's couldn't draw it any better pullback, the triggers in the top 50%, like, if it takes off on a crawl, be reluctant to touch it. Like, I would say maybe under this bar or under this bar, I would be my first profit take. But when something grinds up, it almost, right, it becomes an 8MA break kind of profit take. Like, yeah, you just got to leave it alone when it starts crawling like that. And I think there's a place where you have an argument for your first profit take to be like a bar by bar situation, but like, you don't know how far it's going to go. And then this also is not like, I mean, you can make the argument that like you can stop the trade here on the power trend break, I still don't, I still don't want to get out of this. I'll bet by the end of the day, this thing was up at $69. It's something funny when like there's nothing too green and there's nothing too red in here, and all you get is like these tiny bars. I'm telling you, that stuff is just going to crawl all day long. So I know you have the right, but like when the bars that you're taking profits on are just making higher lows and kind of crawling up, just take it on a bar by bar or something like that. Take your first profit, and if you want to A stop that, I think that's reasonable. I myself kind of want to pivot stop this, and that's just from my experience. So I'm not going to tell you to do that. The checklist doesn't tell you to do that. I think the checklist will say you're within reason to make this an A to May stop. But like for me, I just see, okay, here's another pivot that holds, and I just go like from high to low. I don't think this is anywhere near, like, it's just in the top half, and I don't want to let anything appear like there's nothing even that scary. So I kind of just go, well, let it sit. But if you don't have all day, then yeah, you can finish it right here. But like even that is just like, it doesn't even touch the 50% zone. It doesn't even touch it. So yeah, I know in the time you just want to do something. We all think we need to do something here, but I'm like, you're going to see enough of these that when something's really healthy, there's just no significant red and no follow through and just no reason to get excited about any of it. And, you'd look back at it somewhere around $69 at the end of the day and go, this scared me out, this little thing, in the top, third of the whole, so it's kind of different when things go and they shoot up and they make these zigzags, but when they kind of like make a nice move and then they just kind of start to crawl, like that's what the best ones look like. The best ones just make a bunch of small bars, and it's almost like it doesn't want to tell anyone that it's going to move $6. So so it just kind of crawls along, and you can just see people are throwing little tiny buy orders and little tiny buy orders, and and at the end of the day it'll exhaust somewhere up there. Those are the ones that move dollars and dollars. They don't let anyone know that they're happening. So I'm just talking a lot, but it's definitely worth it to leave one on when you're not getting anything too exciting. So yeah, thanks for sharing that one. Okay, what do we have here? Trying to find a name on this one. Although I do recognize the yeah, you're welcome. Do recognize the fonts here. Whose is this one?
Hey, good job.
Oh yeah, Ali, there it is. I see it now. Okay. All right. So we've got our igniting off the 200. Here's our fabulous 4. We got one lot. I understand being a little skittish here, and then on confirmation adding, right? I get being a little skittish on that one because it just wasn't very clear. Your max loss per trade is $200. So if you're in at 150, 150, then your stop is right about here. If your max loss per trade doesn't quite fit, I'd probably make it an event stop. I would say if this gets taken out, you'll at least hit the bottom of this. So it's not worth it to risk that much. I think this push up here, you've definitely got 2 pushes. And I think a 2 push profit take is justified. You know, these days it's doing that kind of stuff. Now, anything above this red body is your red bar ignored. That's where you do it. This is where people are taking profits, though, right? So this is not where that should be taken off. Like you should be getting some right there. That's the 2 pushes beyond your red bar ignored, right there. Not the first bar, but the second one. You should have an order right in here. When I see a push like this, that's like 50 or 60 cents, and it started to pull back a little bit. I have an order in here. I don't want to miss this, right? And I do see that you put in an order, and then on the 180 just jumped out, right? Just got immediately scared. And I don't think that's what the checklist would have you do. I do think that up here, your stop can come to color, so it can be here, which would give a little more space. Or even down here at the bottom of this tail. And then a 2-bar break would be right here. But you didn't really give it room. You kind of said, I know that this is the end of the show, and jumped out. And I think it is a whale complete, however, right? So if if this is the first pullback, then technically this is a whale complete, and you could make the argument that you had your first move up, your pullback, whale complete, and by the boss trading rules, you could be out. You could have a profit take here and close the trade here. I also am not like if once you get above the red, you have your stop to break even. I have no problem with that. Like, so this is the push away, and and then I think once this starts to fail, I think either stop to color, or you can just say I'm not going to lose the new high on a whale complete. So I think that's okay. You're asking if A-to-A trail is more appropriate. This is not an A-to-A situation. Why is this not an A-to-A situation? Right, it's not a power trend, right? Power trend looks like this. Just draw some train tracks. The bottom is your A-to-A, and then inside you have this, right? And guys, I want you to look at your stop adjusts. You have 7 of them there. None of them is a moving average stop out. We don't have moving average stop outs. We have power trend stop outs, which is a 2-bar break of the A-to-A, but you have to have a power trend. We don't go, oh, see, it broke the 20, I'm out. Like, we don't do that. And we don't, oh, we broke, the 8 on 1 bar, I'm out, or 2 bars, right? Even a 2-bar break of the A-to-A, when it's not a power trend, no. How many times would you be knocked out of a trade if you just said, well, it broke the A-to-A, and it wasn't a power trend? It would be all the time, right? That's what, like, a lot of times things are reacting to the 20, right? So here's the 20, and it goes up, and it pulls back. Meanwhile, the A-to-A is going like this, and then, right? And, you'd break it here, right? And it's going to be a little different, right? Okay, Betty, what's your question? Yeah, the big bar for the new high could be used as a stop in the sense that you could call this whale complete because this was your first pullback, right? So once you get to whale complete, you have the right to close the entire trade, right? You would have a profit take here, and you would say, all right, whale complete. And I'll say this about whale complete. Whatever your whale turns out to be, if the whale complete, like here's your new high, turns into a 180, you have the right to close the trade, right? Once we're in this territory, if your new high becomes a massive elimination, I mean, why does Oliver have us take profits at new highs? Always. Why do we always have a new high profit take? It's because the professionals sell the new highs, right? That's where they're getting out. They bought here, right? So if this turns into a 180, you got to be out. So the only time where you got to be like really, really alert is when you get into your whale complete zone. Now you got to go. Is this going to follow through? If so, I'm staying in. If not, I'm getting out, right? Now, it's kind of different when you sort of have things that are just making, you know, beautiful pullbacks. But this one, look at how this first move happened. Look at this tail thing here. What is this telling you? It kind of exhausted right out of the gate, made a little pullback, and then it exhausted a second time with a bigger fish, right? It's really got that bigger fish feeling. So, Betty has a question. Let's see. I find myself lost in the minute. How do I see the macro instead of the micro and lose the big picture? Many false breakouts. The thing, Betty, is that right now we're in a market where a lot of stuff is not following through. It's just acting like summer. That's all it's doing. So, and you know, you say many false breakouts, and I don't know why. Like for today, I'm looking at Uber and going, it's perfect, but nah. And then I look at Apple and go, yeah, that's the one. Like, look at Apple. That's not false. And I didn't want to do an anticipatory entry. I really didn't want to. But I was in about here. I was like, it can't look better than this. And it was like the first 30 seconds. And I was like, you know what? I don't care if this one wipes me out, because I will go in the opposite direction if it in one bar just creates a massive wipeout. But I'm like, if this goes, it's just gonna, you know, take off. So, you know, I looked at this. There was no way to not take it. It just, you know, even as anticipatory, right? So I combined two things. Okay, the first line, please. What do you mean? What do you mean by the first line? Yeah, 5 minute is a good way, right? To just look at things and have it be clear, you know. Yeah, it was really clear today. And then if you look at other things like here's Twitter, I bet this was a false breakout, you know. You see that? Here's one of the fake outs, right? Okay. The second answer was not related to your question. And I don't think you want to, like, I want you to take some punches here. How do I see the macro instead of the micro and lose the big picture? How do I see the macro instead of the micro and lose the big picture? And you're lost in the minutia. Okay. Yeah, sometimes the bigger time frame will get you there. And I think also, Betty, it's going to come from experience. It's just going to come from experience as well. But going back and look at the 5 minutes, if we look at Twitter this way, here's a sell zone, right? And in here is a bit of a buy zone. Now, does it make more sense? Like, it's like if we kind of zoom out a little bit, you get a perspective on it. And then if you go back to the 2 minute, right, everything looks perfect, doesn't it? But that's kind of the market we're in right now. Meanwhile, here's the hourly chart of Twitter, right? So I do like to have an idea of what's really happening, right? Now, this morning, here was that perfect bull elephant bar. But as you zoom out a little bit, notice what the meaning of it is. It's not that much, right? So, I do have other time frames like hourly and daily. It's on another screen just so I can get a quick peek. And I do want to know, am I really clearing stuff or not? And you do find out over time that you're not really clearing anything. When you when you when you look at it from this perspective. Now you get why something like that would fail, and it's still not even wrong, it's still not even wrong, because it's like, you don't know that this is going to just reverse there, do you? You don't know that's going to reverse, but when it does, maybe you go, okay, I'm going to get out of this trade, and I also think it's going to crawl to the downside, so maybe I just try a green bar ignored and see if it can make it all the way to the bottom. You might get your money back. So there are things like that. And Edward's saying, it seems like range plays or playing the pivots has been working much better than breakout and momentum plays for me lately. Seems like breakout plays have had very little to any follow through. Yeah, like, I would pay attention. I mean, you say that, Edward, but if you look at Twitter from a longer perspective, it's been the best stock for a while. Look at this. I mean, look at it. It's crazy. You had 3-4 days of nice follow through off the open, the 1 hour chart. But if you're playing on, and so, it's good to know which stocks that you're playing are in a sideways daily trend and which ones are in an uptrend. Uptrends just tend to do more predictable stuff, right? So and that's something you can do pre-market. So Betty's asking to zoom out into bigger time frames. I will say that Oliver has been suggesting the 5 minute, and he's been saying things like, look, I would have you trade the 15 minute, except you wouldn't get enough practice, right? You'd get in like 5 trades a week or something like that. It wouldn't be enough, or you'd be sitting all day long. And I'm not saying that the ones off the open aren't there, but if you were to just kind of go, all right, this one's in an uptrend, that one's in an uptrend, these guys are sideways, this one's been going up for 5 days and is likely to finish. If you knew that about your stocks, then you could look at them at the open and have a better idea of what you're breaking through and what support and resistance areas are there, because right now those support and resistance areas are holding very well. That's all I can say, is that right now that stuff is a lot more important. It's not always like that, Like, there are times when markets are flying, but if we go to the daily chart, all right, Snap is trending. Twitter is trending, but it's, see where it's at. Oh, sorry, the charts don't update quick enough for me to snap through things, but look at Starbucks. I mean, there's a whole bunch of nowhere, right? And you have big expectations for Starbucks. I mean, I like when it gets to the top of a daily thing and flips over like this, but you don't know what it's going to do, and you just kind of look at the 2-minute chart, and it eventually comes around. So, having said all that, I think it's time for me to flip it over to Tony. You ready to go, Tony? Sorry, I got this phone ringing in the background. All right. I'm going to hand it off to you, my friend. I hope that was helpful. Yeah. Get those notes taken for stop and reverse, and if you have any questions, bring them back next time.
Sound check. 1, 2. 1, 2, 3, 4, 5. Okay. Sound coming in good. Let's give a big applause to Tyler. He did such a great job.
Hey, good job.
All right. Let's see. I gotta get ready. I'm traveling, so things are not quite set up the way I usually have them. I'll try to get it set up that way, though. Give me 1 minute here. Get my screen sharing going. So the market was good for the NASDAQ today, but the Dow and S&P are down. Okay. I have a completely different setup today. Okay. Let me try it again. Hold on, you guys. Give me 1 second here. Oops, that didn't work. It's even worse. Bam, bam. Let me start over. At least I know the screen share is working. Working too good now, huh? I'm getting the same screen over and over. All right, let's see if I can. All right. I'm not sure how this is coming out. You guys see a split screen, right? You see. Yeah. Let me try one more thing. Alright, I'm going to have to do it this way. It's coming. I won't be able to see. Okay, so. Do you guys see one screen now? I'm not able to see it. How come it does multiple screens? I'm not sure why that's happening. Okay, I'm gonna have to squeeze it into. I'm on my laptop, so I'm not sure how this is looking for you guys. Can you see the screen better now? Yeah, bigger by minimizing the room. Okay. Okay. So, you guys see. Well, let me try something to make it a little better. There. Okay. Guys, let me know. Does that look better now? You can see the FinViz. Can you see the Dow chart up here? I'd opened at prior day's close and had a big bullish red bar going straight down. Yes, okay, good. All right, so the market, the Dow opened straight down with a big bearish elephant bar straight down. Then it kind of goes sideways and then continues the trend downward. Right, so it's down substantially. The NASDAQ, on the other hand, gaps up from the prior day's close. Gaps up and gives you a nice bull elephant bar, but doesn't have any follow through. Kind of pulls back a little bit with bottoming tails and then goes sideways. Right, shows you some wicks, a little topping tail, continuing sideways, crawls up a little bit and then rolls over a little bit. So it's still in the upper 1/3 of this bar, right? If you fill in this gap, It's a strong bull elephant bar, staying up in the top 1/3 of this bar. The Nasdaq is strong today, right? On this chart, the heat map kind of reflects that. But if you see the S&P 500, it gaps up. It gives you a bullish elephant bar. I mean, bearish elephant bar, right? So it gives you a bearish elephant bar down and another one down right through the prior day's close, but then gives you a bull 180, right? And goes sideways on the prior day's close. So it goes below the prior day's close, comes back up, and then it drops down. So it goes down substantially. So the S&P 500 and the Dow is down. NASDAQ is the great winner today. And this heat map will show you that. Okay, this heat map shows Microsoft up a little over 1%, Apple up a little over 1/3%, which Tyler and I played this morning. NVIDIA is up 4.9%, incredible. There was good news over the weekend, how they're using Google's cloud and several other news that came out and just knocked it out of the park. Intel's up, so the semiconductors are doing good. AMD, Google's down a little bit. Facebook's break even. The services are down except for PayPal. Financial credit services. The banks are down. Break even down. All right. Abbott Labs up. Diagnostics up. So we have a lot of red in aerospace, industrials. The utilities are up. This is how the heat map's looking today. All right, so now we've got the picture of the market. And today I'm going to talk about violence. Right? I haven't talked about it in a while because it's usually not for beginners, but I have spoke about it. So for some of you, it might be repetition, and for others, it's brand new. So it kind of works great into the stop and reverse that Tyler was talking about today. Except for this is a little more radical at times, but it's very similar, right? So I wanted to go over market law 1. What's Oliver's market law 1, right? Market law 1, the law of momentum. What is the law of momentum? Well, Sir Isaac Newton, an object in motion tends to stay in motion, right? Sir Oliver Newton, no, I'm just kidding. Different ways to communicate them. Let's see. Okay, so this is like Oliver's law. Market law 1. After a solid green bar, expect another one to follow 80% of the time, right? So an object in motion tends to stay in motion, right? Big elephant bar stays in motion 80% of the time. So 20% of the time it will not. So it will not always work. This is a game of odds and probabilities. 20% of the time it's going to go the other way on you. So you got to be nimble enough to get out if that happens, or to see it and not play it. So a solid red bar, expect another one to follow 80% of the time. So if you got a solid green bar, right, 80% of the time you'll have follow through. If you have a solid red bar, 80% of the time you'll have follow through. Now this is simple. This is nothing complicated. It's not rocket science. It's simple. It repeats this thing over and over and over and over. We make it complicated at times. But with practice, it becomes easier and easier for you. So the bigger the green bar or the red bar, the higher the odds of follow through. Meaning, if you see continue is closer to 90% of the time, it means a higher odds that you're going to have follow through 90% of the time. Remember, repetition is what creates mastery of your skills, right? So you have to practice a lot. You have to build your knowledge and practice a lot to get your skill level up that success, the stairway of success. Because your goal is to become a master trader. So you keep your eye on the goal always. Remember your goal. You're a master trader. So you got to climb this step of your skills up, right? To get successful at this. So keep your goal in mind to become a master trader and build your skills step by step. Okay, most of us don't like violence in life, but in trading, it can become profitable for you. So it's not the size of the bar, it's how it was formed. Was it formed from power? Was it abruptly or unbelievable force? Or did it drift up? Right? Did it crawl up? No. So violence has less to do with size than force, power, or abruptness. It's how impactful, how dramatic, how powerful was that bar formed, right? Did it just go bam real hard, or was it real slow pace, right? It's got to be forceful. It's got to be powerful. You'll see it when it happens. It doesn't happen all the time, but when it does, you'll see it. Here's an example. I was trading Microsoft a long time ago. This was when we were on the other platform, Fusion. Here's the 2 minute, and here's the 1 minute. I had the 1 minute because it showed you my dots where I was in and out, right? So I shorted it at the open, goes down, and I start selling. It was going sideways. I had profits. I was doing good. And then it just dipped again, and I added some more, and then I sold on the way down some more. And then it's going a little sideways. I see the 200 moving average zone, right? On the 1 minute, it was even closer. And then all of a sudden, it just erupted. Poof, straight up power, strength. Look at this change, right? So I tried to get in. It was moving so fast, I couldn't even get in. So I hit alt one, finally got in. You can see where I started stacking in. Then it hit the prior day's close. So it closed all this, all the downward force that it had earlier. It completely wiped it out, right? Cleared all this. Got the prior day's close. I start selling, all the way up this tail, right? So I'm layering out up this tail, Then the next bar gives you another topping tail, and I finished out. In fact, I think I overshot it, and I had to get out. But this was an incredible trade. I got both sides of it. I shorted this side, and then I hit it on the violence up, right? So you got to be ready for the violence. You got to practice these and know how to play them, you know? And with practice, you'll see it. It'll come to you, and you'll be able to do it. Now, here's Boeing, and I didn't have the marks on this one, but I jumped in on this violence. This violence cleared all this, right? So I saw this bull elephant bar, and it cleared all that, and I'm like, whoa, that's showing me a signal. It's strong. This is powerful. This is eruptness. This is coming in. So I jumped in. It's 164.79, somewhere around here. On the second bar, I was in. And then I'm seeing this 200 moving average, but remember, in violence, the 200 moving average does not count. Nothing counts in violence, right? I'll explain that in a minute. But I kept going through, and I saw the prior day's close, and I'm thinking, oh man, I've already had a nice long run. I'm fat with profits. I better take some of my money. So I started out at 167.90, which is right around here. So looking at the whole number, prior day's close, and the exhausted area, and I think I got out too fast, right? So sometimes with violence, I get a little anxious, right? And I got out too fast. So, with hindsight in 2020, I can see I can be critical, criticize myself, and see that, I probably should have left a couple lots in and rode this up, because this bear 180 is a signal that's going the other way. I should have waited for that signal, or at least with the last couple lots, I should have waited for that kind of a signal. But I was fat with profit, so I just got out. Took the money and ran it. But looking back on it, I can criticize myself and say I could have done better leaving a couple lots in for this bear 180, and then got out up here, try to get the top, right? So it's good to journal your stuff so that you can try to improve. Here's another violence. It's a company called Slack Technology. Tickers work, right? They had an announcement that Salesforce was buying work. So when that announcement came out, boom, this thing just popped right out of violence, force, abruptly pushed up hard. This is a hard pop, so much so that it halted, and then it popped again, and then halted. And I'm thinking, whoa, this is incredible violence. So I jumped in here, and it popped again, and it had follow through, and I got out because I tend to go fast with violence. I tend to get in and out fast, right? So I took the money and went, and that's probably something I can improve upon and try to leave a couple lots for the end. I got up out here in this play. Actually, I did pretty good, and I got out on top. Here are my trades, right? So it worked out. Jumped in heavy on violence. In 3 or 4 minutes, I was done. Nice profits. Okay. Here's coin at the open. When they went IPO, and I saw, wow, this is kind of powerful up, abruptly forced. This is not normal. So I jumped in and then got out on top. Poof, and made profits. And this was like a $20 profit here, so I got out. So you can catch these kind of runs when they happen. When it's live, you got to be ready to jump on it. I'm going to go over that now. Violence cancels everything, right? So it cancels the whole numbers, it cancels the moving averages, cancels everything. Let me show you back here. See the 200 moving average? Canceled that. Canceled, busted right through it, right? The whole numbers just busted right through it. There's a whole number, there's a whole number, just went right through them. Cancels everything. So violence cancels everything. Violence plus makes everything disappear. If you get a big violence plus, nothing else matters. Betty was talking about micro and macro and all that. In this case, you're micro focus, and you just get, out as soon as you have nice profits in a good area, exhausted area, because everything disappears. All the moving averages, all the whole numbers, anything else just disappears. Violence cancels out everything. I repeat that because it's important to know and to understand. Violence plus another event takes out all red to the left, or the 200 moving average, or the double bottoms, or etc. Cancels everything. Anything that helps the violence is significant. That is adding to the violence legitimacy, right? So on one side you have it cancels everything, but on the other side it gives you legitimacy. Violence plus cancels everything above or below. So it's a tricky thing. That's why it takes a little practice to get it, but you will. Cancels all resistance above it and all support below it. So here's an example. The Feds were talking, holding interest rates at 2 o'clock, made the market pop. This was back, I don't know when. Oh, March 17, 21. The Feds were talking and bam, look at this violence, right? Clears out everything, just pops up right through the 200 moving average. Then shows you a tail, then gives you a red bar with a topping tail, goes a little sideways and pops up again, right? Continues on its upward trend. So you have to play this. I didn't play this one. I just used an example of what happened at 2 o'clock, because sometimes it will, instead of popping up, it would drop. So you never know which way it's going to go. I wasn't ready. I wasn't focused, so I didn't get a chance to play this one, but it would have been nice, right? That's how the SPY reacted. And then this is how the Qs reacted. Very similar. It's going sideways, dips a little bit, and bam, 2 o'clock came, and it just popped up right to the 200 moving average, breaks right through, gives you a big tail. Look at that tail. Gives you another topping tail over here. Kind of a neutral bar, but it's following through. It's crawling sideways, 45-degree angle up with topping tails. Topping tails, which usually is a sign it's going the other way. But since this was violence up, it just kept going up, and then gives you another bull elephant bar plus all the way to prior to its close. You know, this is a strong move up. That's what we mean by violence. A very strong move near up or down, whatever direction. So 6 things to know about violence, right? Size is not determining factor. Power, abruptness, and force is. Must be powerful, not just the size. You know, it's got to be a strong move up. Like this example here, right? Look at the size of these bars, right? The previous day. They're all small little bars, and all of a sudden, bam, you get a bull elephant bar plus, right? And follow through. And then a bull elephant bar plus again. This gives you a big pullback all the way to the 20 moving average, but then it goes up again. So this is kind of like a big whale right here, right? In the middle of the day, you caught this whale going up. So size is not the determining factor. Power and abruptness and force is. Must be powerful, not just the size or little moves or an elephant bar here and there. It's got to be a big, strong bar. Nothing else matters. Support, resistance, trap zones, moving averages, etc. Nothing else matters when you're in the moment, in that big, violent bar move. Nothing else matters. Violence eliminates opposite color, right? It eliminates a chunk of the opposite color, not just one bar. It's a clearing everything to the left. It clears it all out. Then, like some examples I just showed you, then it's very powerful violence. So what do you do when that happens? You dive into violence. Don't wait. Just dive in. You saw some of the examples. I just dove in. You know, even if I was a little late and missed it and whatever, just dive in. Get in it. These things happen fast. You have to be able to get in fast and get out fast. Counter moves are a gift. Don't be afraid of a counter move into the violence. Look to add, like the example I just showed you, right? Counter moves here. This has violence up. Nothing matters. A 200 moving average doesn't matter. Whole numbers don't matter. Nothing. Prior day's close. Oh, they did give you 2 top and tail, then pulls back to the 20 and then takes off again, right? So this is a gift, giving you the gift. So dive into violence. Don't wait. Counter moves are a gift. Don't be afraid of counter moves into violence. Look ahead. Violence that happens far away from the moving average is exhausting, ending the play. You have igniting violence that starts the play and exhausting violence that ends the play, ends the move and ending. So you need to learn the areas of origin, which is igniting areas of that trade, of that trend, you know. Then you need to learn the exhausted areas of violence, right? Those are very key things. If you want to look at the macro size of things, you know, this is igniting right in here. This is the origin of this just exploding up, right? Then it goes all the way to part it pulls back and then up again. When you're this far away, I mean, this thing went from 317 to 322. You know, that's $5 up, and it gives you 2 topping tails. This is the exhausting area. This is a flag, big flag up here that tells you, big red flags telling you these topping tails are flagging me, saying, hey, I'm exhausted. I ran a lot. I went $5 up. I'm tired. I'm going to turn around and roll over on you, you know? And I'm not sure what the rest of the chart did. Here it looks like a little bounce up and then maybe down or kept going. I don't know what happened. But by this time, you should be fat with profits, you know, and you just get out. Get out of the play. The violence of it is over, you know. But from here on, new highs or lows or sideways, you know, it changes. The whole uh, trade here changes. So this is the violent part you want to stay with. So let me repeat, violence that happens far away from the MAs is exhausting, ending the play. You have igniting violence that starts the play and exhausting violence that ends the play. Ends the move, ending. When you identify violence, don't wait. You have to dive into violence. Practice these. Even if you get a practice account and practice in your practice account and you see violence, just dive in. Don't think nothing else. Don't wait for anything else. Don't look at any other movement or supports or resistance or MAs or prior days closed. Just dive in. Dive into violence. And you'll get better at it. And you'll know whether to go in light or medium or heavy. I like to go in medium, you know, sometimes heavy. Dive into violence. You do not wait for violence to be over, then act. It's too late then. Violence is fast. You have to get in fast and get out fast. Right? The odds of follow through in violence is so powerful. It's 87%. Remember, this is a game of odds and probabilities. And the odds on this kind of violence is 87%. So almost certain that you can't wait. You have to dive into violence and then get out with your fat profits, right? You have to move fast. So you get better at it. You become a better trader, right? Violence trades happen occasionally. You must be ready to move fast for nice profits, right? So if it takes a big dive on you fast, you have to be ready for it. Or if the opposite happens. Okay, the end. Ta-da! let me see how that went through.
Okay, awesome, Tony. Thank you. Betty has a question for you.
Okay. Let's see. Can you make your lot size 2 or 300 if you're doing so many in a trade? Yeah, it depends on your lot size on what you're capable of doing. If you see violence, I would go in 200 or 300 lots and then get out fast, right? At each alt one, we'll take out 200 or 300. Alt one, usually you should be programmed 100 shares at a time. So, you just hit it twice for 2 or 3 times or whatever. I used to like hold the key down and let it go and then throw hundreds of shares at a time. But that's more advanced stuff. You guys just do it, hit it once or twice at a time, depending on your buying power size and how many you can buy and sell. Tyler, Jan. What is the stop? What is the stop? Okay, okay. This is a more advanced technique I'm showing you. It's not really part of the trade list. I like to give you guys tools for your toolbox and show you different things that are more advanced down the road. So once you have more experience under your belt and you have more knowledge, and you will see plays like violent plays, and you'll be able to trade them. So I don't want them to surprise you, and you're like, oh, what's this? Or what do I do? At least you've been exposed to it. I try to show you different tools, and this violent one is a powerful tool. It's a more advanced tool, but it will make you a better trader. It will make you profits, nice profits in a very rapid time limitation. I mean, you saw some of them I did 3 or 4 minutes. I was done, in and out. You have to practice and be ready to move on a second's notice. Get in and out. Adjust your lot size all at the same time. You're in and out. This is more advanced. So if it's too much for you right now, don't worry about it. I'll probably go over this again next month and the next month, so you can get more familiar with it down the road. If this is the first time you've seen it and it's kind of advanced for you, don't worry about it. I'll be doing them again. Next month, I think we have 31 days. It's a long month. So I'll probably hit on it again. Sometimes I don't do violence because I think it's a little more advanced for most people here in this training room. But I like to expose you guys to different things. So down the road, you won't be totally surprised and you'll have that tool in your pocket. Hopefully you'll get to practice it, and get better at it. All right. I didn't go through the violent examples on the TC2000. This screen, I usually like to go through on them, but violence are not something that come up all the time. I think Tyler had an example or two. So I didn't really see them. And I didn't. Okay, here's one coin, right? This thing, right? Let me explain from the beginning, right? You have a nice bear bull, elephant bar, goes sideways, riding the A train up, sideways, A train, sideways, because you always top and tail is going to roll over on you. Pulls back and then ride the A train up again, right? So this is the exhausted area, as I was talking before, right? Exhausted area. This is the origin, the igniting area. Pull back up, exhausted area. And what happens up here? You have this whole number, and it's tired of going uphill, and then it just drops hard on you. You get the first 2-minute bar gives you a nice red bar, and then the second one gives you a bearish elephant bar, right? That's a pretty strong signal. Is rolling over it, and it goes pretty fast because happens in like 4 minutes. It just drops. 6 minutes, it drops substantially, right? The whole number of 243 all the way to 239. So a $4 drop is pretty fast in 6 minutes. But this is coin. This thing moves like that. It can move like that on you. So I don't recommend you guys trade this stock because it's pretty pricey. And it can do things like this. This is what you learn by practicing. If you have your 10 stocks that you trade all the time, you know how they behave. You know, a lot of those would not behave like this, would not drop $4 in 6 minutes on you. You know, if you were long, you would know this is exhausted area and you needed to get out on this big bar up. Then rolled over hard on you. This is a hard collapse. This is not a hang glide pullback like I taught you guys on the pullbacks. This is a hard collapse down. Right? This stock has a tendency to do something like this. It's kind of violent down. So you need to know your stocks. You know that it would do this. I don't recommend you guys play this because of this. You play the lower price stocks that usually don't move that fast. Right? This is a double-edged sword. You can make nice profits on that if you caught it going down. You were ready for this. You knew exhausted area and you shorted it. You can make nice profits on it. But you're not ready for that. Guys are still doing this side going up nice and slowly, you know, to learn, to build your experience, to build your knowledge. You have to practice, and journal your stuff. I like to journal and critique my stuff so I can get better and better, constantly improve and build your skills to become a master trader. That's how you got to do it. There's no easy way around it. You got to do it step by step, building your skills. So this was an example. Let's see if I can find any more. No, they're not. They're kind of rare. They don't happen all the time.
Okay.
Okay. Time to go. Let me see.
Yeah.
Are we done yet?
Okay. No, we're done. Okay. Yeah. No, I wasn't sure. I thought I was cutting you short, and that was certainly not my intention. So okay. Thank you all for this session. Thank you for being here. Thank you, Paola, for translating. Tony, great presentation. Tyler, thank you for all your presentation on stop and reverse and journals. Thank you all for being here. So Wednesday is our last session from this series. Okay, so see you all on Wednesday at 12 noon. See you then. Bye-bye.